If you own silver, whether it's in coins, in a safe, shares in an ETF, or a mining stock, what happens on June 16th could be the single most important day for your investment this year. Here's the problem. There's been a 6-week policy vacuum since former Fed Chair Powell, also known as the money printer, last attended a Fed meeting. And since then, we've had no guidance, no direction, just silence from the single most important institution in the world. And Wall Street's been quietly positioning in that darkness, while most investors have been left completely blind. Because in just a few days, on June 16th, Kevin Walsh, the new Fed chair, chairs his first Fed meeting, known as an FOMC meeting. And for the first time, we'll hear where he wants to take interest rates. So by the end of this video, you'll understand the 3 things Walsh said under oath that reveal his real agenda, the 1946 playbook the Fed is about to use to quietly confiscate your wealth. Not your silver, but your wealth. And the 3 indicators that will tell you exactly when to make a move. My name is Felix Prehn. I'm an economist, and this is Winston here, our former investment banker. And we're going to show you what the institutions already know about the June 16th and how you can use the same playbook, whether you have, $10,000 or $1 million. So our plan here is to throw a lot of value, a lot of depth at you in this video. So to ensure it really lands, Winston here has also made a free workbook for you, which you can download. It's completely for free. They're not going to ask you for any credit cards, anything like that. Just put in your email, download it. felixfriends.org/silver2026 is the link. It's in the description down below. So let me set the stage for you, because again, most people have no idea what has happened at the Fed. On April 29th, Jerome Powell, the man who printed more money than anybody in the history of the world, held his final press conference as Fed chair. And that was the last meeting. So his term officially ended on May 15th, and the Senate confirmed Kevin Walsh as the new chair. Walsh got sworn in May 22nd, and his first Fed meeting doesn't happen until June 16th. So we've had this 6-week period between Powell leaving and Walsh taking some action. So 6 weeks without someone steering the ship isn't really ideal. Think of it like this. Imagine the pilot of a plane gets up and walks away from the cockpit. A new pilot sits down, but he doesn't touch the controls for the first, say, 6 hours. He just sort of sits there. The passengers, which is you and me and Winston, we have no idea what direction we're heading into. And that's what just happened at the Fed. But Wall Street, they don't sit around waiting. They use that 6 weeks to quietly reposition. So while you and I were reading headlines, the institutions were moving billions of dollars. And I can show you that because Winston has an app called the Winston App. One of the things we track in there are silver institutional money moves. And institutions have been selling. And you might have noticed that in the silver price, right? Pretty significant. But what also it shows you is that when they sell off at such an extreme level here, this line I'm highlighting, over the next 90 days, we typically saw a 29% rally. Past performance doesn't guarantee the future. I haven't got a crystal ball. I'm also not a financial advisor or registered for anything of that sort. So you got to come to your own conclusion on that. But it's certainly something that piques my interest, which is why I watch this here in the Winston app. I check on that every week, as many other things as well. COMEX inventory and Shanghai premiums and all that kind of stress stuff, the futures curve, all that kind of good stuff that gives you more insight into what's happening with silver. And you can access that for a whole month for free. There's a link down below if you want to play around with it. Now, before Walsh got the job of Fed chair, he had to sit in front of the Senate and answer questions under, oath. I did not have, how the sentence goes. And he said 3 things that Wall Street is obsessing over. The first clue was, I will not take orders from the White House. Sounds kind of good for the market, right? They're like, Fed independence. The crowd is like, woohoo. But what Wall Street actually heard is, I'm willing to keep rates higher for longer, even if the president throws a fit. And remember, Trump has publicly said he wants lower rates. He even said a rate hike would be wrong. So right out of the gate, there is a collision there. Now for silver, this matters enormously, because if Walsh keeps rates high, the dollar stays strong, which can push silver down for a while. But it also means that inflation keeps cooking. And the pressure for a big rate cut down the road builds and builds like a spring. Clue number 2, and before we get into this, some people think, oh no, but Walsh is a Trump guy. He's going to do what Trump says. Well, Jerome Powell is a Trump guy too. He was appointed by Trump. Jerome Powell is a card-carrying Republican. People forget about that all the time. But the thing is, once you become Fed chair, people get independent ideas. They do whatever they want. They sort of don't need to answer to anybody, so they don't. And before they get appointed, they tend to be very friendly to the president who appoints them. Jerome Powell, same story. This typically happens to most Fed presidents. But what Walsh said about AI will be probably the defining part of Fed policy for the next few years. He said it'll drive down prices over the next 5 years plus. He says AI makes everything cheaper and more efficient, so he's betting on technology to save the inflation problem. Now, for silver investors, this is very important. If Walsh is right about AI, well, what does AI need? Physical silver. Yeah, every data center, every chip, every piece of AI infrastructure uses silver. So AI being successful means more demand for silver. If Walsh is wrong about AI, it doesn't bring prices down, say, then inflation keeps running high. And silver goes up anyway, as an inflation hedge. So either way, whether his AI bet works or not, silver could come out winning. Sort of a, win-win type situation, isn't it? And then the third Walsh clue is this. He said, I won't be a prisoner of my own predictions. There'll be no more telegraphing. And this is bigly even, because he said he's very skeptical of forward guidance, which is what the Fed does. They tell you months in advance what they're going to do with rates. Powell used to do this all the time. He'd basically say, we're probably going to cut in September, and the market would price it in. Walsh wants to stop doing that. He calls it making officials prisoners of their own predictions. So what does it mean for you and me, regular investment chaps? Maximum uncertainty, maximum ups and downs in the market. And when the market goes up and down a lot, silver tends to move a lot, unfortunately in both directions. There's an opportunity here, though. That is actually really massive, but only if you're positioned before June 16th, not after. So if you connect all the dots here, we have a brand new Fed chair who might clash with the president on rates, is betting on technology that needs silver to work, is removing the safety net, the predictability of forward guidance, and he's about to walk into his first meeting with 39 trillion in debt, inflation running at almost 4%, a dollar index sitting at 100, which is the number that Wall Street really cares about. It's a powder keg, right? It's a powder keg, and June 16th is the, well, you could say it's the match, but you get the idea. Now, before I show you what I would do about this 6-week vacuum in silver, I need to ask you something a little bit more personal. Do you remember the last big IPO boom? If you remember it, put it in the chat down below, just so I'd remember. 2020, 2021 was the last one. Companies were going public, so we're being listed on the stock exchange every other day. Airbnb, Coinbase, Roblox, Rivian, right? So where were you when that was happening? And did you make money doing it? Or maybe did you make some money and then you left it all, handed it back to Wall Street? Or maybe you just sat on the sidelines and you saw some people who like 10x their money in a year or something. Just be honest with yourself for a moment here. Try to remember that period, because what nobody wants to admit is exactly this. The people who build real wealth, the kind that changes your family's future for generations, they do it by recognizing moments. And moments like right now. We're entering what I call the IPO summer. Companies that have been waiting on the sidelines for years, for decades, are about to go and list on the stock exchange. And the people who know how to position for this, the people who understand this 5-year cycle it kicks off, they're going to build wealth machines. And 5 years from now, you're going to be in one of two groups. Group number one, the people who watched it happen. Again, just like they watched 2020 happen, just like they watched 2010 happen, just like they've watched every major opportunity pass them by. And then you have group number two, the people who showed up, who learned the playbook, Wall Street's playbook, who built something that actually matters for their kids and for their retirement, for their legacy. So which group are you going to be in? Seriously, tell me, group one or group two? Group one is the guys who sit there and watch it, and group 2 are the guys who are doing something about their legacy. So I want to get real with you for a second, as you Americans say. Father's Day is coming up, and you might be thinking, random mention. It's true. I don't care if you're a dad or not. This isn't about, greeting cards. It's about a question every person needs to ask themselves. What legacy am I building? If you retire today, right now, would your family be taken care of? If something happened to you tomorrow, God forbid, did you build something that lasts? And right now we're standing at the beginning of a 5-year window where the people who learn how to build wealth are going to separate themselves from everybody else. And I'm not saying buy all the overhyped IPOs, not at all. What I'm saying is learn the skills that separates the pros from the amateurs in this opportunity. And I believe this is so important that I'm going to hold, for the first time ever, a live workshop on Father's Day. And it's called How to Turn the IPO Summer into a 5-Year Wealth Machine. Never taught this material before. And honestly, I might never run this again, because these things happen every 10 years. So I'm doing this coming weekend on Father's Day because of what's happening right now. This convergence of the Fed, the IPO window opening, the market rotation we just talked about, it's setting up the next 5 years. If you don't learn how to position for it now, you're going to spend the next 5 years watching other people build wealth. So I get it, you're busy. Father's Day is about relaxing and all that, but the best gift you can give yourself and your family is showing up for yourself, for your financial future, not hoping someone else is going to take care of it. So if you want to show up, you want to learn, you want to build, right? Show up in the comments. And it doesn't matter whether you're a dad or not. This is not what this is about. It's about the legacy you are creating. It's about the next 5 years of your life. It'll be live. It'll be free. It's 2 hours long on Father's Day. And there's a link down below. You can get a free ticket. You can claim your free ticket at wealthmachine.org. Wealthmachine.org. The link is in the description. We're going to have 10,000 tickets for this event. Completely free. No questions asked. So sounds like a lot, but I can tell you they go pretty quickly. I will also be in the United States where I'm holding this live, but it'll be on Zoom. So it's easy for everybody to join. So let me know if you're going to join us. Write Wealth Machine in the comments. If you want to be part of that event, it's going to be special. I can tell you that. But the promise of this video is to help you with understanding the silver markets first, right? So the coming Sunday is the big vision, and we're going to go much more detail than we could in a 20-minute video like this. So you understand the opportunity window, right? I just walked you through that. And the Fed is planning something that is called financial repression. Doesn't sound very friendly, and it isn't. It is not a conspiracy theory. It's actually economic policy. Economists study it. The IMF published papers on it. And what it means in the simplest possible terms for you, not some abstract nonsense, is when the government keeps interest rates lower than the inflation rate. So inflation is running higher than interest. And they do that on purpose. Because what does that do to money? Well, it shrinks money. As I like to say, it gives it the Ozempic treatment, right? Think of it like this. Let's say you owe me $100, okay? And let's say at the moment, a loaf of bread costs $5 a loaf. I'm going to New York next week. I understand it's about $5,000 in New York. Now, the government now turns on the money printer, and a few years later, bread no longer costs $5, it now costs $10 a loaf. So everything got more expensive. But you still only owe me $100, same number. Except now that $100 only buys you how many loaves of bread? 10 pieces. Before it bought 20 pieces. So your debt effectively got cut in half. Right? This $100 effectively became $50. Not because you paid it off, but because the money became worth less. And that's what the government does when they got themselves into a sticky situation like they have right now with debt. They let inflation run a little hotter. And over time, the debt just melts away. If you want to be a conspiracy theorist about this, look at what's happening in the Middle East. That's causing inflation. Maybe that's intentional. I don't know, not for me to say. But this is great for the government, yep. But it's really terrible for you because guess what? Your savings are melting away too, just like that $100. And they've done this before. 1946. World War II just ended. America had spent an absolute fortune fighting the war, my lot, unfortunately. Yes, it's true. I must admit, German. And the national debt at the time was 106%. We can joke about this sort of stuff nowadays, can't we? The Brits watching still think, Hitler. That's all they ever think when they see Germans. It's true, isn't it? If you're a Brit, put that in the comment. Just write H in the comment. I know what you're thinking about. So right now, GDP, debt to GDP is 100%, basically the same. So in 1946, the government had a problem. They owed a mountain of money. They couldn't raise taxes enough to pay it off. And people were sort of tired of sacrifice because they'd just done 5 years of that in World War II. They couldn't refuse to pay people back because that would destroy the credit rating of the US. So what did they do? They held interest rates at about 2%. And they let inflation run up to 4%. Nothing dramatic or drastic, but it's simple maths. If your savings account pays you 2% and inflation takes away 4%, you're losing 2% of the value of your money every single year. And they kept this up for how long do you think they kept this up for? Put in the comments. Put a guess in there. 2 years? 5 years? What do you think? 28 freaking years. Yeah, until 1974. 28 years of a quiet, invisible wealth destruction and wealth transfer, because there's always a winner on this. So debt to GDP fell to 23%. And I was like, oh, the US is being such a responsible country. No, you guys paid for it. Your parents paid for it through inflation. So what can you do about it? Well, think about who paid for it really. The people who really paid for it were the bastards who held cash. There were the people who had money in savings accounts, and there were the people who had money in bonds. They really paid for it. So the responsible people paid for it. So new Fed Chair Walsh, it's a job I definitely wouldn't want. When he sits down on June 16, he has a couple of options. Option one would be raise rates to fight inflation. But that means the interest the government has to pay on the 39 trillion there, it would be even greater. It would crash the housing market. It could trigger a recession. Everybody would hate the man. So he's not going to do that. Nobody wants to be hated. Number two, he could lower rates, help the economy, cause more inflation, and that will also weaken the dollar, right? Here's a third option, which is do nada, nothing, nichts, which means what? Inflation is already higher than interest rates. So the value of your money is already losing, just more quietly. I believe sooner or later he is going to cut rates, and they're going to do that because they want to support the economy and they want to strong all this. It's all nonsense. It's all about dealing with the debt. They have to let inflation run above interest rates because it's literally the only way to shrink 39 trillion of debt away without blowing up the economy. So this whole thing called financial repression, it isn't a choice. It is literally the only thing they could possibly do. So what does it mean to you? Let me make it really concrete, really crystal clear for you. And by the way, we're going to go a lot deeper into the actual investment choices, how to follow the money and what Wall Street's doing. If you join us on the weekend, go to wealthmachine.org, grab yourself a free ticket there. Say inflation runs at 4%. It's already there. Your savings account pays you 2%, which is actually quite generous right now. What's the outcome? You're losing 2% a year. Doesn't sound like a lot, right? But if you had $100,000 over 28 years, you would lose $56,000 of your money. Right? You get the pain? It's crazy. It's called compounding, just in a really negative way. Now, in reality, it's actually going to be a lot more than that, because the stock market, in my humble opinion, is going to keep going up at this sort of 10 to something % a year, which means other people will get 10, 15, 20, 30% richer every year, while you are 56% poorer. And the wealth gap, and I'm seeing this, I see it every time I go somewhere I haven't been to for a little while. I see it in 5-star hotel prices and so on. The high-end stuff is getting so much more expensive. I'm talking 10x more expensive. And it's simply because people who have money have made so much more money. So you can say, oh, it's frustrating, it's manipulation, let's get communism and all that. Well, have a look at North Korea or Cuba, how that's working out for them. It doesn't work very well. So the better thing to do is to simply follow the smart money and simply buy what those guys are buying. And honestly, it's far simpler than you think. You can see it because they're moving billions of dollars around, and it's pretty hard to hide billions of dollars moving around in the markets. And I'll show you exactly how that works. I'll show you the exact footprints, what I learned when I was a banker and so on Father's Day. So click on that link down below in the description and get yourself a ticket. But let me give you a really high view of what's really terrible. Cash is terrible, CDs are terrible. Bonds tend to lose in both in this world. Stocks, yes, but only the ones with what I call a moat or pricing power. You got to be careful with those. Paper silver has got a problem that I think we're all aware of. It is called the COMEX, and it is, I was going to say manipulated, but that's not the word I was looking for, is it? No, it is, the market is very efficient. I think that was the word I was looking for. Physical silver, yeah, you can't print it. There's no counterparty risk. There is an actual silver deficit, and I think that's going to stick around. So I like silver, but am I putting all of my money into silver? No. I think there is a place for it, but I think there is never really a place for putting all your money in one basket, because that again becomes risky. But yes, the 6 years of supply deficit is definitely something that I'm very, very aware of with silver, which is why I'm liking it. So what do we watch here? I'd watch three things. One is the dollar index. Basically, a lower dollar means higher silver. I'm going to write that down. COMEX. Yes, people talk a lot about COMEX. We track it in here. We see here COMEX inventory. It's down 3.6 million ounces this week, and it's pretty low. It's pretty extreme. It's come down a lot. It's pretty extreme. Overall, we have a silver squeeze sort of type situation. But, and I know this isn't a popular thing to say, the COMEX people are pretty smart. And they might be able to keep it like this for quite a long time. They have a hold on the market. They intend to keep it. So don't rely on COMEX blowing up. Just don't. I know it's a popular thing to talk about on YouTube. COMEX is going to blow up. They're going to run out of silver. Well, they probably won't. Now, the less silver they have, it still puts pricing pressure on the silver prices. So they could go up and we could see some more short squeezes. But I don't think COMEX is going to go anywhere. It's just why? Because they own the silver market and they like it that way. It's very profitable. Watch the Walsh press conference. Watch for the tone, not just the words. I'll probably make a video around that when it happens. But it's always better that you can make your own decisions on what you're seeing out there. That you have the skills to read what's happening in the market, and that's my intention for you guys for Sunday. And that'll work for silver, it'll work for gold, it'll work for stocks. It's all more or less the same rule book. Now, what I would do right now is look at your total portfolio. Look at what percentage do you want to have in something like silver. That might be your silver budget, right? You can choose ETFs. There's physical ones, there are miners, there's all that. We're going to be talking a little bit about that on Sunday. We have all the silver ETFs and so on in the Winston App too, if you want to look into that in more detail. I would spread an investment like this over time, not because it's going to make you more money, but because it's going to make you sleep better. So when someone comes to me and says, I have $100,000, I want to buy this stock or this commodity, I say, okay, wonderful. I can't tell you what to buy, but if that's what you want to buy, you can buy that. But don't buy it all today. I would suggest you spread it out. And they go, why? And I say, well, probably bugger all difference to your financial outcome, but you're going to sleep a lot better. Because if you buy it today and it drops 10%, you're going to be killing yourself and you might sell it. Whereas if you do it, a sixth today, say, drops 10% tomorrow, you're like, woohoo, I'm going to get it cheaper, and then you buy a bit more. It's a psychological little trick. Watch the three things I just talked about: the dollar, COMEX vaults, what's happening with the Fed meeting. But if I can just summarize this framework, this is the biggest shift we're seeing in financial markets. I believe we're going back to 1946. Now, if you knew how this was playing out in 1946, and a lot of people did, smart people did. Actually, smart's the wrong word. The skilled people did. The people who'd been taught what was going to happen, they knew. It's got nothing to do with smartness. It isn't foreseeable. It isn't logical. It is just, well, someone's got to show you. They made a lot of money. They became very, very wealthy in the 50s and 60s in the US. But a lot of people, the responsible, safe people, got killed, got hammered, and I don't wish that for you. So understand what's happening here. The 46 playbook is happening again. Understand what assets win in this world and what assets lose in this world. And remember, the institutions are ahead of you on this one. But you can follow the institutions, and I believe markets are, what was the word I was going to not use? I was not going to use the word manipulate. I was going to use the word made very efficient by institutions. And we don't have to be first, but we can't be last. And once you understand that, once you understand how to see how the big money moves into or out of a stock or silver or gold or any asset, and you follow that trend, I think life becomes a lot easier. And it is just a skill set that one can acquire. I can give you the foundation of that on Sunday, on Father's Day, if you join me at wealthmachine.org, and set you up to potentially build that wealth machine for yourself for the next 5 years and have a really good time out of this, because you're like, I knew what they were doing. I understood what to do about it. I got guidance from people who'd done this before in institutions. And I think that's the smart play. So we're going to have a lot of fun. Join me on Sunday. If you do, again, write Wealth Machine in the comments down below. If you got some value out of this, A, download the workbook because it'll be valuable, and B, share this with somebody. I will share the invitation to Sunday with somebody. Anybody you know who's in the gold or silver space, or just generally an investor who's a bit concerned about what to do right now. Are we at a bubble? Are the IPOs going to be good? Are they going to be bad? What should I be buying? Should I be chasing this? Like all that stuff we're going to answer for you on Sunday. Wealthmachine.org. I wish you all the best. Every 10-bagger that Hugh and I have ever studied, think Tesla, Netflix, Nvidia, Amazon, they all did this exact same thing before they exploded, just like Hugh's about to. And